Hi there, welcome to Kneppy Invest and welcome to another stock analysis video. This particular episode has been inspired by a stock club podcast titled Two Undervalued Stocks to Add to Your Portfolio, episode number 268, released on 3rd July 2025. I've already recorded a video on one of these companies, which was Novo Nordisk. And in this episode, I'm going to look at Nike. I'll just mention a little bit of commentary in their description of this particular podcast. And Anne-Marie breaks down Nike, her favorite stock for 2025. Nike is in the middle of a significant brand realignment, resulting in some short-term pain. However, suffering may be coming to an end according to its latest quarterly report, and the market is beginning to warm back up to the long-suffering swoosh. Can the home of Just Do It beat the tariff blues? So what I'm going to do in this video is I'll have a look at some of the financial metrics of Nike to determine whether I would consider this company to be high quality or not. And that is important. In fact, that's usually the most important step when I'm researching a company. Is this company high quality or not? And the reason it's a very important process, important step, is because I treat high quality companies significantly different than low quality companies. I'm more willing to own high quality companies for the long term, and I just trade low quality companies because low quality companies over the long term may not necessarily rise. Their share price may not necessarily rise, but high quality companies over the long term, more than likely their share price will rise. For instance, mining companies. Have a look at a mining company. Very cyclical. Yes. Anyway, so let's go to Fiscal AI. Now, I am doing this completely blind. I have not looked at Nike in the past. This is the first time I've looked at this company. The one thing I do know about Nike is the share price has pulled back, or had pulled back a fair bit. I don't or haven't looked at their chart for a while. So let's have a look at Nike, whether I could call this company high quality. And then we'll have a look at valuation. Now, valuation is not as important as I thought it was when it comes to high quality companies. And it sort of makes sense when you think of a high quality company, share price should be rising through time. So valuation doesn't matter as much, but you don't want to buy a high quality company when it's significantly overvalued. So we'll have a look at that. Okay, so for some reason, Fiscal AI was not working there, so I had to refresh it. Now it's working. That's great. Apparently there is 21 listings for Nike. And we only really want to care about the New York Stock Exchange. Okay, so Nike. Okay, first thing I'm going to do is have a look at revenue growth. Now, I do prefer revenue per share growth, but can't be picky because Fiscal AI doesn't provide that information on the company overview part of their website. But anyway, a couple of red flags straight away here. Now, I am reminding myself that possibly there has been some short-term pain because of what was it quoted as saying? A significant brand realignment resulting in some short-term pain. And let's hope that it is what's been happening with Nike, because revenue over the last 3 years has actually dropped 0.3%. And over the last 10 years, revenue has only increased 4.2%, which is not that high. So this is looking like, on first impression, a more mature company. Not much growth has been seen for this company over the last 10 years. So 4.2% is just above inflation, and you want to be significantly above inflation. And in fact, earnings per share has dropped 16.8% over the last 3 years per year, and earnings per share over the last 10 years has grown at 1.6% per year. And again, that is a little bit too low. So straight away, some significant red flags for Nike when it comes to growth. I want to see that a little bit better. Next thing I typically look at is margins. So I wouldn't expect high margins, particularly operating margins for this company. Gross margins at 42.7% and operating margins at 8%. I probably would assume that has dropped over the last few years just based off the lower growth in earnings versus revenue over the last 10 years. So I'm assuming operating margins have dropped over the last 10 years. 8%, I probably would say 8%, yeah, sort of makes sense for this type of company. 8%, yeah. Return equity is at 38.1%. Return invested capital at 26.8%. That's pretty good. Those are actually really nice numbers for those two metrics, particularly when you are determining whether a company might be high quality or not. So really the main red flags I'm getting with Nike is just a lack of growth over the last 3, 5, and 10 years. Nice return equity and return invested capital numbers. Okay, the other thing I just look at is dividends. So yield is 2.2%, meh, and payout ratio is 72.4%. So that's one of the reasons why this company is not really experiencing significant growth, is because they're giving a lot of their profit back to shareholders as dividends. So I do or would prefer that payout ratio to be a little bit lower. Okay, so based off these numbers, based off these financial metrics, I wouldn't be sitting on the fence. I'd be saying, yeah, I'm not so sure about Nike as a long-term hold, because I'm not convinced that this company is high quality. P ratio is 33.3. Now, that might seem high, but there is a chance that this company has seen their profits drop significantly over the last few years. There could be some one-offs in there as well. Forward-looking P ratio is 42.9. That's interesting in itself. The other thing I might look at on occasion, particularly for companies I might want to own for the long term, is just the debt. Net debt of 1.87 billion. Now, this company has a market cap of 106.42 billion. So that sort of debt's not that significant. And debt to equity is 0.8. So that's not above 1. So I wouldn't be that concerned about the debt for this company. One thing I do like in Fiscal AI is they have a bulls and bears section here. So, for instance, the bulls saying in fiscal 2025, Nike brought back long-term executive Elliott Hill, whatever. Okay, although currently depressed, Nike's EBIT margins should return to mid-teen levels in the medium term as it increases full price sales, releases new merchandise, and grows sales in high-margin markets. So that's one of the things that bears say, or bulls say. Bears say Nike imports about 16% of its US footwear from China, so tariffs might affect this company. Nike's dominance in running shoes has been challenged by the success of relative newcomers like Hoka and On. Interesting, Hoka is a shoe I'm looking at in terms of hiking. So that's interesting. Okay, now what was mentioned in that commentary on Stocks Club was that they had something about the last quarter. So what I'm going to do now is have a look at some of the financial numbers. First thing I always look at is revenue. So this is revenue. And the company has seen the revenue pull back significantly in financial year 25. Look at that. Significant pullback. Went from 51.4 million down to 46.3 million. But I also like to have a look at quarterly numbers. So let's have a look. Oh, no doubt. Oh, there we go. So not really seeing any significant change in the last quarter numbers. So relatively flat. Now, one of the reasons why in this particular description, one of the reasons why it was said suffering may be coming to an end according to its latest quarterly report may not be in the numbers, it may be in the commentary. So you can actually have a look at the commentary for Nike, and all you have to do is go back to, where are we? Go to Investor Relations, have a look at the most recent quarter. So this was released June 26th. It's not that long ago. You could actually have a look at the transcript. I'm a little bit disappointed they don't have a presentation, like presentation or slides. It's one thing I don't like about American companies is they're less likely to release really pretty presentations. What you can do is maybe copy all this. There it is. Copy this, copy everything, and you put that in ChatGPT, because all I want is a nice little summary. And let's see what ChatGPT comes up with. Because it's fairly lengthy. Okay, so it's asking me what I want. Bullish information. Let's see if ChatGPT can give me some bullish information when it comes to Nike. Okay, signs of a turnaround, which was actually mentioned in the description of that podcast. Signs of turnaround, win now actions showing traction. CEO Elliott Hill emphasized that Nike's win now strategy, focusing on culture, product, and marketplace execution, is beginning to deliver results. Quarter four was the largest financial impact from these repositioning actions, suggesting future quarters may see sequential improvement. We expect our business results to improve. It's time to turn the page. Wholesale momentum and order book growth. Okay, performance categories are growing. Nike digital repositioning gaining traction, marketplace expansion, innovation pipeline for financial year 26 looks strong. Okay, so and keeps on going. Resilient strategy against tariffs. It's asking me if I want a YouTube script. No, I don't. Anyway, financial information. What about financial information? I really actually do like doing this with ChatGPT because if you go back to this is just it's just not put out in a nice way, which is why I do really like presentations because it makes a difference. Okay, and you can actually you can definitely have a look at some of the financials of the company in the last quarter, and also guidance and outlook, which is something I probably prefer to look at, is just the guidance and outlook. So revenue expected to decline mid single digits, so we're really not seeing a bit of a turnaround just yet, so they are looking a little bit forward. Gross margins to drop, so two big negatives there: revenue declining, gross margins dropping, and SG&A low single digit growth. So you do need to have a little bit of trust in management when it comes to Nike based off the numbers, what we're seeing with the financial metrics, and also their guidance and outlook, expecting that still dips in revenue and gross margins in the next quarter or the current quarter. Okay, so let's go back to financials. So this is the revenue growth for Nike over the past 10 years. And even if you break it down into quarterly, it's still going down. So really need, maybe some of us need a little bit of proof that this strategy is working. Just saying it looks like it's going to work isn't enough for some people, and maybe I'm included in that. Another one I want to look at here. In fact, we'll have a look at income as well. So income has dropped. In fact, income has almost halved since 2022 from 6 billion to 3.2 billion. And a significant drop in profit from last year to this year, from 5.7 billion to 3.2 billion, is probably an indication of why the P ratio is at 33. So if they actually just doubled their profit, P ratio would be looking like 16.5. But still, that might be a little bit high for a company that has there's still a lot of uncertainty when it comes to Nike right now, even though they do have some bullish commentary in the last quarter. Now, next thing I want to look at is operating margins. So I do expect operating margins and gross margins to have dropped over the last 10 years. Let's see if that is right. Well, I could be completely wrong, but I expect it to have dropped. And we'll have a look at gross margins first. And yeah, actually, in fact, the last year, that was the lowest gross margins this company has seen over the last 10 years. In fact, gross margins have dropped from 46.2% to 42.7%. But you can see it's going up and down. So it's not a straight line down. So this could be maybe the worst. This could be the worst, or the last year could have been the worst. And maybe now we will see gross margins, operating margins starting to increase, even though they do expect it to decrease in the first quarter. And the last thing I'll look at here is operating margins. And this one also has dropped from 13.9% down to 8%. It did drop to 8.3% in 2020, probably COVID-19 related. So that is a little bit of a concern that it has dropped significantly over the past year, down to 8%, which is a 10-year low. So we don't really want to see operating margins drop much further from there. Okay, next thing I'm going to look at is just the return on equity and return on invested capital, just to see how they've tracked over the last 10 years. Are they dropping? Are they rising? That sort of thing. So we'll get rid of the margins. And in fact, I don't have to look at these separately from each other, because you can definitely see that over time, if we exclude the last year, over time, they've been going sideways. On occasion, you'll see it a little bit lower than usual, but on occasion, you'll see it be a little bit higher than usual, but no real reason to be concerned about this historical look at return on invested capital and return on equity for Nike, even though in the last year both were at sort of a low point, apart from 2018. Okay, so let's move on to PE ratio, or valuation metrics. Now, this could be a little bit tricky because I do think maybe, potentially, income could have been a little bit down from where you might expect it. In fact, before I do that, I'm going to go back to income, and I'm going to have a look at the quarterly results over the last 10 periods. Got to click on it there. And yeah, this really highlights. So typically, over the last 10 quarterly periods, profit tends to be above, we'll say between 1 billion and 1.5 billion. And then over the last 2 quarters, we have this company has seen the profit drop to 794 in 2 quarters ago and down to 211 million in the most recent quarter. So that has led the profit for the last year to actually drop to what I would consider an abnormally low level. Now, maybe this will continue in the future. Maybe this company has seen their profits drop forever, maybe. But if you do expect profit to get back up to its normal levels between 1 and 1.5 billion, possibly even increase past there, you could say, yeah, the P ratio of 33 has been, I wouldn't say manipulated down, but it's not a true measure of how this company is performing. So let's go back to looking at the P ratio history of this company. Just take your time, and you can see it. The P ratio has increased from 18 up to 33, and the main reason behind that is a drop in profit. Now, if you go back to 2022, 2023, P ratio of Nike was around 36, and that was on what was heightened income or greater income than what we're seeing now. So more than likely, share price of this company has dropped a lot. That is what I'm seeing here. Now, if we have a look at the P ratio over the last 10 years, you might see some, you can see some jumps in P ratio. That is probably because of some one-offs in profit. So that artificially lowered the profit for that year. So that was like in 2018 and 2020. So P ratio got up to 80. This is the problems with P ratio. Some people just look blindly at a P ratio and go, oh, this company is too expensive, or this company is really cheap, without understanding context. There's always context when it comes to income, which is the reason why a lot of investors really prefer to look at stuff like cash flow, or they just don't look at profit. They also look at cash flow, and they try to understand why the profit of a company might be higher or lower in a particular year because of one-offs. So you might want to look at some other metrics. Maybe what's some of my favorites? EV to EBIT. I do like to look at free cash flow yield. Also, I like to look at EV to free cash flow. So let's have a look at these three just to see if we see. You can see even in these, there are spikes. So EV to free cash flow, a big spike in 2023. So obviously there was some quarter, there was a massive decrease in free cash flow that quarter. Otherwise, if we get rid of that spike, it's hard to see it here. I wish we could actually some way get rid of the spikes, because it's just, you can't see much here. But the lowest EV to free cash flow has been around about 24 back in 2018. Currently, it's 32.67. So just based off that, not historically low valuation for this company. Let's have a look at free cash flow yield. 5.94%, which is actually quite attractive, and at the upper end of what we've seen over the last 10 years. So based off the free cash flow yield, this company might be looking attractive at these prices. So that's one metric that looks pretty nice. And EV to EBIT. And again, there was a big spike in 2020, probably because of COVID-19. And really, if we have a look at EV to EBIT over the last 10 years and just compare it to now, it's not at historically low levels. I'd like it to be below 20, and it was below 20 recently. So based off this, I probably would expect the share price of Nike to have gone on a recent nice little run. Share price has probably increased a little bit over the last few months. So let's have a look at the chart for Nike. And let's see, oh, that was the wrong one. GPW, there it is, NKE. Yeah, it has gone on a little bit of a run, not a massive run, but the share price has increased, what's that, 33%? Is that right? 33, yeah, 33% since April. Share price was about $54 then, 72 now. So quick maths, 33%. 1836.54, almost exactly 33%. Yes, I can do mathematics. So share price has gone on a bit of a run. Share price has broken out. Looks like the most recent quarter, 27th of June. The market liked it. Share price up 15.2% on that day. So again, I think the market was seeing some of the commentary, even though the numbers look pretty weak, saw some of the commentary and went, oh, now is the time to buy some at Nike shares. Really good volume on that day. So in fact, just because I wouldn't necessarily consider this company to be high quality, but because of that, it's more of a trading stock. And what happened on June 27 and the potential breakout of this company, the chart is definitely looking more interesting. Now, in saying that, the last time the share price was at this level, say between 72 and 76, wasn't that long ago. We're talking about March. So we're talking about 4 months ago. So share price of this company has been in a downtrend for a while. Oh, yes, for a while. So another thing I should also mention out, is sometimes you can judge a quality of a company just by looking at the long-term chart. So this is a weekly chart for the company going all the way back to when it's listed, which was 1981. There you go. And in fact, this does have, at times, have the hallmark of a high-quality company. Now, the share price went on a massive run back in or between 94 and 97, and then the share price went sideways for about 7 years. That's okay. So obviously, I think the company was overvalued back in 97. And then since then, we haven't really seen the share price fall below the 200-week moving average all that often. It did fall below during the GFC, but after that, it remained above the 200-week moving average between 2009 all the way through, slight drop during the COVID-19, until now. And share price has pulled back significantly from $180 to $72. So the question becomes, is this pullback representing a shift from a high-quality company to a more mature company that is not high quality anymore? And I will not consider mature companies to be high quality. The growth has come to an end. That's why they're mature. They're not growing. And for me, high-quality companies need to show growth. Because I'm more interested in capital growth than anything else. Anyway, so is this a sign that Nike is now a mature company, not much growth moving forward? Or is this a buying opportunity for a company that might have been considered high quality once, and maybe you can still consider it high quality? So this is probably more personal preference in regards to how you would consider Nike. Is it a high quality company or not? Otherwise, as a trading stock, I don't mind this chart. I don't mind this chart at all, particularly on a nice little potential breakout on the release of the most recent quarterly results, which wasn't that long ago, from when I'm recording this video. Okay, so that's all I have for this look at Nike. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.